Welcome to Markets Now. I'm Michelle Rook with Scott Varlick of Coima Varlick. And we have quite a bit of red on the board in both grain and livestock futures already this morning. Not that will stay that way, but let's talk about this cattle market first, Scott. New highs for the move yesterday in both live and feeder cattle futures. What are we seeing? A little pullback today on some hedge pressure, at least initially?
Yeah, and thanks for having me. And it could be the case. These markets have been overbought for 3 to 4 weeks now, and the kind of rally you want to see, just that slow, steady grinder. I always feel more confident about that kind of move, and as flow grow in the open interest. We finally got some funds behind this market, some traders in this market. I think it was maybe the cash market that started to hold that really kind of got it boosted back. So maybe the little downs here and there is some interest of some hedging here. And we had that big break in August, and that was a gut check for a lot of producers. And so now that we've rallied back, we've got most of that back. I mean, we're within a couple bucks of getting that large break back. And so there's some interest in looking at some hedges. And you've got a lot of feeder calves coming in now as we got our fall run underway that they're nervous about hanging wide open. Just all the outside market news and all of that. So it doesn't surprise me that we're going to see some little breaks here and there. And bull markets are forgiving. So I think that could be warranted. It's a little bit healthier if we have these little breaks every once in a while and then continue the grind higher, hopefully.
Man, you are more bullish than you have been for the last few weeks. That's for sure. But, the cash market has turned, and you and I have talked about that. 3 weeks higher, and it looks like some of these early sales, we could be higher again this week, right?
Cash news feels good again. I mean, we had our big break in the futures, and cash bottomed in the low 180s, and I think the futures market was waiting for it to do that next leg lower, and it just never did. Able to hold on, and now we've moved higher last week. We're moving higher again this week. We've got a little bit of 187 passed in the north. There was some small 188 trade to a regional, and some asking prices of 190, which is odd. We're sitting here in October in the north, which is usually your fall run. We've got so many, that calf crop is ready and had good feeding weather, so they certainly should have the weight on them, and we're feeling current and willing to ask higher prices. So we've got advertised Packer kill cuts, which is they like to stand up and really shout about it, but I think that just kind of says how tight these numbers really are. We've seen cattle on feed reports that say, okay, we've got more numbers in this window, and then it just hasn't showed up. And then that just kind of repeats itself again and again. And so the kill cuts are going to start to happen in the south. I would say they're going to keep putting that weight on those cattle to try to fill this hole. And that's what it just feels like. We're still sitting on this tight supply, and that's why we're able to get this cash moving. And I think that's why we've saw the funds enter back into this market. The story feels a lot better. We've got about 50,000 on the open interest plus since that last break. So a lot of confidence just kind of happening there. And now you're hearing about red ink on the Packers. And I guess as cattle feeders, we just are, hair stands up a little bit because this was the bed that they made. I mean, with their record Packer margins just a few years ago, as cattle feeders were looking for a government bailout, we need help, we can't make it. That decreased the cow herd and just decreased the production. So now here we are at these high levels, but we've got a lot of high costs. It's hard to rebuild that cow herd real quick just because of the cost of production that we have to deal with, and higher interest rates. So it's a lot of money that you have to try to come up with if you're really going to expand or not. So I think that's just continuing to show up. And we had this all-time record rally on that tight supply, and now that feels like that's kind of becoming the main story again.
So they are trying to make up for it with higher weights, especially in the south. Speak to that, and how much in the red are Packer margins?
How much in the red? Yeah, not completely sure. I don't think we get the truest of details on what that actually looks like and what kind of deals that they're happening. But it did, as these boxes slipped below 300, I think that put them a little bit further back down. But if they start slowing kill cuts, possibly that's what they're going to do to kind of get those box prices back up. There can be a little bit of a low in the fall, and we can kind of maybe start to rally that towards the end of the year. So I think there's, possibly some light at the end of the tunnel for that. And the weights, how they've, been able to really get well over year ago levels with all of their formula traders, they can just back them up, and that's most of the market. So the packer has control over that, and that's how that's the band-aid that they're using. So with the great feeding weather and the lower price corn and the packer backing up cattle, we're not going to see these weights break for a while, in my opinion.
All right. Let's talk about the hog market, because we're seeing maybe a little bit of early pressure today, but quite honestly, that market has outperformed the last couple of days here in light of the fact that we have this East Coast and Gulf Coast port strike that has been announced, and that's just going to back up hogs. Exports are pretty important to that market, aren't they?
Very important. We export a lot of pork out of this country, and I feel like that would have been more of a worry to the market. So you use the word outperform, and I think that's exactly how I feel about the hog market, that it's really impressed me how it's been able to break out and continue to rally. Big jump in the open interest yesterday. And then we see the higher big export numbers today for pork. And now we're down a little bit. Possibly that was maybe some traders that kind of knew that data was coming out, in my opinion there. So I've been thinking they need a correction, and especially with, uncertainty around how we're going to be able to move pork around. Surprised that they're hanging on. I'm wrong on how this market is acting, and that's okay. That can happen in the hog market for sure. So kind of sticking to my guns that this market is due for a correction. If all of a sudden we get a pork strike that ends, today, maybe we'll get a boost off of that, but I don't really feel like it's penciled that into the market. I just think that these futures have just rallied right on through that news and haven't worried about it yet. So I'm a little bit in the clouds yet, but I'm going to say the overbought status and some of the outside markets could maybe turn that lower a little bit.
Yeah, it's hard to tell. We took out the September highs yesterday in the hogs, and it seems like every pullback gets bought. So we'll see where we go from here. Grains, kind of the same story. So we're seeing a little pressure in all but wheat this morning. We've had some South American rains in the forecast, but are the funds about out of ammunition here too, covering shorts?
It does feel like that engine is running a little bit low on gas. I think this has been, very welcomed rally for farmers for sure as we're into harvest. It's giving us some decisions to make rather than, well, am I going to have to puke this on the low or not? It's giving us an opportunity to sell some of these cash grains up here, and that's a great sign. So, and I'm taking that opportunity to do so. We know we've got a big crop coming in, and now we can kind of look ahead. I don't think that this market is scared to say that it's going back down to the lows again. Even if it does kind of run out of gas in this area, it's maybe finding out where its home really is. So we've seen some increased business. We'll see if that maintains. We've got a dollar that's been up 4 days in a row. I kind of have to keep my eye on that just a little bit, but we're going to have to kind of turn to South America here. And I think that's part of the reason we're going to start to slow down towards the end of the week here, because there is some, forecasted rain that could happen down there. And it's a rainforest. Yep. There's going to be some chances of rain down there. So maybe the end of the week, it's going to be a little bit of risk off now that we've rallied this far. And Sunday nights could be a little bit more on the fireworks side, as we are going to really be eyeing that forecast situation.
Yeah, and you got to wonder when the farmer's selling, the harvest pressure is going to kick into those markets. But even the wheat market, we have been trading some weather, but also some of these geopolitical concerns. And so that has helped the corn market, don't you think?
I think it's helped a lot of these ag markets just with uncertainty what's going on around the world. We've got a couple of wars to talk about. We've got a hurricane. We've got pork strike. I mean, there's plenty of news to be had in a stock market that's sitting up there near record highs. We've got a jobs report or unemployment number coming out tomorrow. So I think there's plenty of nerves around that in an upcoming election. So some of that money feels like it has maybe come out into these ags because we've had some of those days where cattle, hogs, corn, soybeans, wheat, where they've all been up in the same day, and some of these energy markets and some of the metals. So I do think there's a little bit of influx in some of that fund money coming into some commodities, trying to get out of the way of some of the risk and some of that stock market. So I think that's been a little bit of a play here over the last couple of weeks, probably.
Yeah, I agree. There's been money flow. I know you guys hate it when I use that term, but it certainly does make the market move. So
I don't
all
hate
right.
it as long as it's flowing to me, right?
Right, exactly, exactly. And as we speak, boy, we're seeing even red in the wheat market. So we'll see how we close here today. But thanks for joining us. Scott Varlick with Coima Varlick. That is Markets Now.